Hello, welcome to July 6th. Alpha Gold at 8%, but the overall account took a major hit today. We had several exits, and we are now at minus 3.2 for the year against the SPY 15.2. Let's go ahead and look at that. Get that out of the way. There is 15.2 year to date for the SPY. So remember, I said that before. If your system cannot beat the SPY, then you don't have. Why bother? And that also goes to with your investments. But nonetheless, let's get going here. Gold cleared the gantry ever so slightly on Friday, so it got an EP stop right there at 162.20. 166.20 is our stop out. We have a nice curve here on the STO, so gold might be coming to the savior of keeping the account a little bit. We are behind. We're 53, 53, 55, and there is the minus 178 off the bench, and there's our 3.2. So we see that we are behind. All right. That said, we are here at gold, and that's the only one we have in positive territory. Everybody else got knocked down, pretty much. And we had 3 exits today. None were profit. We had 3 exits, and they were all in the negative. I'm going to review those exits because it's important, and then we're going to go to EWJ and talk about what we have planned for that. So now that we have our winner out of the way, let's go on and look at our exit. And the first one on top of the list is XLE. So at XLE, it cleared the gantry. There's the candle that cleared the gantry right on the opening day. Got it. We went to 54.05 and we got stopped out there at 54.05. We were anticipating a 20% loss, minus 20%. We're anticipating a minus 94. We ended up losing $92. Even with fees, we're at 94, so we're slightly lower. And also, too, our exit was 17% to the 20. So we are within ballpark of controlling of risk management. This is one of the key things that comes out of the books with Jack Swigert and the interviews with all the successful traders. And I'm now going on, and now I'm listening to the man of all markets about Ed Thorpe. But we had a lot to cover today. I can cover that another time. The bottom line is this. This was playing for a loss leader. The REI trade, we lost $85. And I transferred that loss to XLE. So XLE 9 was playing for the $85. That's what this trade was set up for. It didn't make it. We ended up with $94 loss. This is now XLE 10. So on my spreadsheet, I will have because we have a lot to cover today. I will be showing that I start with the least amount owed. So now this will still be at the top. It's only $85. I think it's the least one of owed, and I'll keep playing till I get that $85 back. And if you continue making any more losses until it gets out of the slump, then you'll just keep creating new individual loss leaders and have their own obligation to pay back. So that's how it's going to be played out, and that's XLE. All right, RTX, Raytheon. So here at Raytheon, we have it cleared the gantry. That there just ever so slightly cleared the gantry, and the stop was here at 85.70 right there, 85.70. Again, review. We were projecting a 22.9 loss, and we got out at 10.8. We're projecting 110 in the money, and we only lost $25 times 2 contracts, $50. So the bottom line is that even though we're not ahead and we are behind the 8 ball, controlling the risk is highly priority for the rest of the year to see if this account can pull itself up and get even and ahead of the SPY before we get to December of the end of this year. So that is the RTX. So RTX lost $50 with $3 in fees, comes out to $53 for the trade loss, but it carried a 671 with a new O, and now 724. It's still with good ballpark. McDonald's also got hit, and McDonald's lost $35. There it is, $35. We did clear the gantry. We did take advantage of that gantry exit, and we got stopped out. And yeah, it's a good hammer candle that to continue on if we had continue in our in the old rules waiting for the exit down here at the bottom of the ratio. But the thing is, how assured we got that? We got RSI dropping, we have we have stochastic divulging, and the MACD is going in the right direction. But again, we want to we want to reduce risk as much as possible. That's what the whole purpose of the Elvis shift for June. So that covers the exits. Now we're going to EWJ. Now EWJ is going to be is a very different. Now we're off to a bad start, and it might happen, but we are now going in our prior discussion with other traders. This is a leap, and what that means is that we have an expiration of January 13, 2022. That's what this is. This is the real core of DTE trading, right to expiration. And I know I know 5 traders firsthand who use this and have good results with it. The question is does it really work beyond the 5 people that I met? So now we're going to see it happen in the next couple of years. So we are here. We're not stopped out. We haven't cleared our first ratio. So once we're able to clear the GANs clear that, we're going to be putting the stop here to the EP stop. That will control risk number 1. Then risk number 2 is when we cross the third ratio, then we're going to be going to putting the stop at 70-30 if this is reversed. If it continues into a shoot up, which we've seen before, I've gone back and looked at a lot of charts. It's possible to cross the third and continue going up. That's what we're doing. We're surfers. We're looking for that big wave. If it's not going to be a big wave, and it's gonna peter out, let's get out. Take the small loss and wait for the next big one to come up. So that's the anticipated plan here with EWJ. So our first stop is still here. Now we are going to be also initiating that if the price wavers in between here and gets range bound, we will be initiating the 30-day and 60-day exit rule on the trade if it does not clear the third ratio by the end of 60 days. All right. That concludes that. So let's go on to scanner time. Yeah, I'm excited to see scanner time. You know why? Because this is the best time. When is the best time to buy? The best time to buy is when we have a dip in the market for the upside, and we'll see what the scanner is going to be. So now it'll be stochastic weekly. We're not using anymore. So we're going to come over here to our load, come over to personal, come down here to our. We're going to start off with the stochastic trender, which means that the 10-day moving average must be in agreement with the STO. And we're going to be going to the alphas. Of course, we have 1,375 available in buying power. That means we are good for at least 2 trades. So based off our 10%. Now we're down at 535, so 10%. We don't have anything for the upside. Okay, let's go on now over here to the stochastic downtrend side, still in the alphas, and run it. And let's see what happens here. And there's nothing there. Now we'll move up the line to the next level of the STOs, and that is this is going to be the 10-day EMA. Price must close below the 10 EMA. Not so that's we're looking for price going below the 10 EMA. We're looking for puts on this stochastics. Nothing there. Let's go on now to our 10 EMA going to the upside. Now we're going to the upside with the price closing above the 10-day EMA for stochastics. And the answer is, we have 3. XLU, gold, and gold we already have, EMA we already have. So only XLU is going to qualify to be looked at. So in the closing seconds, let's go ahead and get the rest of this done. That was it. So now we have stochastics core. This has no dependence on direction from anything other than the indicators itself. So we're going to go to the downside for the for the alphas, and we do know that we do have a call XLU that we do. Then I'm going to have to run this list here on Facebook. So we have several there, and then we're going to go on now to stochastics upside in the alpha group, and the answer is we have 3 again, the same ones. So that is in conclusion of today's report. We're going to be looking at the possibilities of several puts and calls, depending upon how much they owe in their qualification. With that, I thank you very much for stopping by and checking it out. Bye-bye.